video for Monday, July 22nd. Well, we did have a very, very slow trade on Friday, and that's to be expected. Summer doldrums, Friday trading is here. We had some small gains and losses across the board: Dow Jones, S&P, Russell, and the NASDAQ. NASDAQ, however, is definitely one of the weakest link. We'll get into that in the chart segment. And we have Netflix reporting today after hours, and of course we have Apple tomorrow. That's going to be very interesting, at least for the Nasdaq, and we'll get into that right in a moment. But I looked at a lot of charts over the weekend. Looked at a lot of internals, and I do say that longer term we are still well intact with this uptrend. We are a bit overextended, as you know. We're up 21, I believe, over 21 over 23 days. Which is pretty crazy. But again, when you have Ben Bernanke pumping liquidity into the market, that's the sole driver. And I believe on Thursday we had the most inflow of retail money come in on Thursday than we did since 2008. That to me signals a warning sign that a top is in place. Now, can we go higher? Absolutely, we can go. We can go to 1710 in the S&P, and that's really where my target is, maybe even 1725. No one knows where this thing's going to stop, and that's why we don't want to be short. We want to continue to play the trend. The trend is your friend, and look for quality setups until this market can at least give us some sort of a decent correction. Now, I don't think we've had a 2%, I think the most we've had was a 2% correction, which is absolutely nothing. So, to me personally, buying or adding to long positions up at these areas is crazy. I would not be doing that. Risk is against you. Look for high probability trades when you want to look to add to your position. So keep an eye on that. Don't forget also earnings. We've had some ho-hum earnings here. So and analysts had brought down estimates. So that's not really too great. So let's just keep an eye on tech, what tech is doing. Tech has not been doing well. And also a lot of these indicators, they're really at these levels here where we could look for a little bit of a pullback. But again, there's no catalyst. If we can get a catalyst, then the markets can pull back. But otherwise, I think summer trading will continue all the way up until the end of August. Now, we could get a little bit of a pop going into next month and then kind of reevaluate. We get that little weakness going into September, October. So that's something that we're going to be looking at in the coming weeks. But right now, let's take a look at our indicators. NYMO, McClellan Oscillator. Although we're at 1690-ish in the S&P, look what we happen here. As we slow down and kind of grind higher, our indicators start to roll over from that overbought state. So at 46, I like to see the market really rally one more time real hard into that 1700, 1710 area, and get that overbought reading of 7080 in the NYMO, and that would encourage me to at least take an objective short area here with a tight stop. But right now, as the NYMO rolls back over, we're just creating energy, building energy here. Here's the S&P 50-day stocks above the 50-day moving average. We are up at these 84 percentile areas, so this is actually a good area where the market would to roll over. So let's keep an eye on that 8 crossing over that stocks above the 50-day moving average. Okay, take a look at the tick, and again, tick above zero again, holding true. No worries about this at all. This is quite bullish and will continue to be that way. Take a look at the New York Stock Exchange, new highs and lows. Lows are above zero again. We are above zero. We dipped a little bit lower here for that couple of days, and we went right back above again. So internals are telling us that the markets continue and would like to move higher. Okay, let's take a look at the NASI Weekly. Still on a buy signal for the third straight week, and again has plenty of room to run here, guys, as you can see, until we get to this higher formation area here. Take a look at the New York Stock Exchange Summation Index, same thing again, and look at this. We are not overbought yet, so we still have plenty of room to run. So when they say, oh, we're overbought, we shouldn't be these areas, yes, we are. However, when you look at some of these internals, they've unwound from the overbought state, and now they are on their way climbing up and still have room to run. And these are on the weekly charts, okay? Remember, this is the weekly. So we have plenty of room, guys, to run. And even if the market were to hiccup for 2 or 3 days, this will continue to be on a buy signal. So just keep that in mind as well. VIX totally collapsed. There is absolutely no volatility in this market, as you can see. I think take a look at the lows here. Look at the 11.5, 12 again. Now, this is interesting. If the VIX can give me another 2 or 3 days of large engulfing red candles and can get outside this Bollinger Band and then close back in, that would be a buy signal for the VIX, a sell signal for the market. So keep an eye on that, guys. This is actually a viable setup here, and this is something I'll be looking at as well in the coming days. Take a look at the dollar, and I want to get into some precious metals and some commodities. Excuse me. I've been saying last week, I said, here's that area of support. What I'm really looking for is not here. I'm looking for here, 81 and a half. 81 and a half, 81.75, even 82-ish. As you can see here, the 200-day moving average continues to move higher. I think it catches this area here, right into this area. I think the sweet spot's going to be 81.75 to 82. If we can get down there, the markets will rally where the dollar sells off. That's going to be the cue. And once the dollar sells off, we want to see what the dollar does. If the dollar can hold this area and really start gaining momentum to the upside, I think it would take out this area here, and that's where we would get a decent sell-off. Okay, so the dollar is going to really be key, and that's what I want to watch for. And this is what I like to get my analysis off of, is the U.S. dollar. Okay, speaking of that, let's take a look at gold. Gold weekly, I put two fibs, one off of here, high, low to here, and then from here, high, low to here. And here's the 38% retracement, 14.16, and that comes in nicely with the 20-day moving average. So I say that gold will probably pop up a little bit, but I'm looking to sell gold at 1350 to 1400 area. I'm really not looking to buy gold. I mean, even though there's a real negative sentiment out there, I'm not looking to buy gold. I'd rather be more comfortable on the short side. So I would rather let it go up, maybe for a day trade, but I would really look to see gold get into that 1350-ish, 1400 area. And then reevaluate and see where that goes. And if it can hold this area here and start to roll back over again, then I'm going to be a short seller of gold right in these areas. So that's what I'll be looking for in the coming days and weeks for gold. And then I get a couple of emails. Why you bearish gold? Take a look at the monthly chart of gold. It just tells you. That's why I'd rather be sticking to the same side of the trend. I'm not really looking to counter trend this. So that's why I'd rather be safe about it and let it pop up into that 1400. Now, if you look at here, let me get my cursor out of the way. Look at 1400. Look at where the 8 monthly EMA is, and then the 21 EMA. And if we get, as we move higher, this 8 will continue to come down, and that'll kind of cap this 1400. And that's why I like to sell gold. I'd rather be a short seller of gold than be a buyer of gold, at least counter trend. Take a look at copper. Copper doing absolutely nothing, as you can see here. And they call it Dr. Copper, right? It usually leads the market. Well, this is not doing any good for the markets at all. So really want to be still concerned about it, but obviously a lot of other market participants are not. I want to just quickly show you the weekly chart of copper. We had that beautiful symmetrical triangle. We broke down, and now we're just literally just bouncing around here. Still making lower lows off of this, as you can see here, lower low, lower low, lower low, lower low, and then we just keep moving lower. So copper really not helping out at all. The bullish case. Take a look at crude oil. Crude oil really did well. And when we identified the symmetrical triangle, I put this inverted head and shoulders here back up in, I believe it was middle of May. So this was a great trade. I would not be buying crude oil here. I think if you want to take a counter trend trade to be safe, I like this short for a pullback, some sort of a bull flag into that 100, 102 area, making that higher low off of this low here. I would even like to see a break higher, a push out of this 108 and change, and then fail, and that's where I look to short for maybe 2 or 3 point pullback. But I would not be looking to buy crude oil at these areas. All right, let's take a look at the charts. And we have our monthly chart here doing quite well. We are now at resistance here with this uptrend channel here from 2009. We do have a little bit of room left here, maybe 170, 171, but that should hit the upper end of that trend line, guys. So, 3 times is a charm, right? Let's see what happens. But we are now getting into this thing, and I think we're a little bit stretched here. Look at the monthly chart. Monthly chart is overbought. MACD stochastics, no volume at all from the previous month. And let's see what happens when we get to the end of this month here. Okay, this is the weekly chart. Again, volume very light. As you can see here, we did kind of rebalanced our stochastics here from overbought to now neutral, and we're just rolling back up higher again here. So we had 4 weeks of straight gains, and as of right now, the markets are up again, 2 1/4 handles in the pre-market session, testing 1691. So I say 1700. Why not? I mean, you're right there. You're 8 points. We could get that today. take a look at the daily spiders. Now, this is interesting. The spiders have not taken out highs as of yet, and we also have Russell, which did not. No, not Russell. Excuse me. The transports as well. Take a look at this. Here is the diamonds. Dow Jones did not as well. Well, we briefly took it out, but came back here a little bit under pressure on Friday. But we held it. We took it out intraday, and we closed right on it. So diamonds still looking for a pop higher. Transports as well, along with the S&P. Here's the transports here. We had a little bit of a doji candle right on the highs here. So we'll see. Let's keep an eye on it. Again, overbought readings. Overbought is not a sell signal. Remember that, guys, okay? But let's see what happens here. But the leader did wake up, as you can see here. Right, we did wake up here coming from this formation here. Now we're back above the long-term uptrend line from the November 2012 lows, and we look really pretty good here. I would not be, again, guys, looking to short the market. There'll be plenty of time to short the market when that time does come. Okay, IWMs are still on fire. We're on this uptrend line coming from this downward channel here. We broke back out of it, and now we'll continue to make new highs here. And again, I keep mentioning this from last week. I really don't like these little tiny candles here. Really doesn't tell me much other than the fact that we gap up, we hold the gains, and then we gap up the next day, hold the gains, gap up the next day, hold the gains. But we don't have any really, I don't see any real buying. Again, it could be in part of the summer months, and that's probably one of the reasons. But still, that's why I'm using a lot of caution in the trading here during the summer. As you know, moves do get exaggerated on the upside and into the downside. Goldman Sachs daily, as you can see here, looking quite constructive. 8 crosses over the 20. Now, if we could take out the highs here and then start to pull back a little bit and hold these gains, then I think the financials will definitely, well, they're definitely leading right now, one of the sectors, the leading sectors. This is interesting here, so it's something to keep an eye on. You can take a look at the XLF here, doing really well. That's what you want to see when you're rallying. Okay, so we have the IWMs that are rallying. We have all of the 5 sectors that we follow rallying. Now, the transports have actually lagged a little bit, but it did play catch-up, so that is still good. We have the dollar weakening here, so that's also good. So definitely a bullish case here. And that's why I say I wouldn't be looking at short as of yet. Apple, interesting. Okay, so we have this little bit of this downtrend line. We failed to break higher. Apple reports on Tuesday. This does not look good to me. This is a little bit of a bear flag here that I put together, right? And if this tells me, if anything, that Apple may be reporting not so stellar numbers, and if that's the case, Apple will get smashed down to at least, I think, 400, if not lower. So keep an eye on it. Now, Apple, I think, this is going to be where Apple needs to shine during earnings season tomorrow after the close. Because if Apple doesn't, then I think Apple will continue to sell off and will probably at least test these lows. And that's where I said I wouldn't be accumulating Apple here, guys. Let the earnings come out. If earnings are stellar and they're fantastic, let the stock see what it wants to do, because we want to see how the market interprets their earnings. So if it's good or they sell the news, let it go. Let's see what happens, and then look to establish a position if you really want to wait. You really want to establish a long position in Apple. I would be waiting. I think Apple here, to me, and again, I'm not looking to put my money where my mouth is at this time, but I think Apple, you probably will buy them at lower prices here. So this does not look good, that since Apple can't really break out of the 400 and change that we've been really holding for quite some time, all of 2013, this to me looks like Apple goes lower. Now, unless they come out with something really fantastic, what they say, I think Apple is in a little bit of a hurting here. Is a little bit of some pain, or at least going to be into some pain, unless they don't report some good numbers here. So just keep an eye on that, and that's actually affecting the Qs, as you can see here. Qs actually lower. Technology actually hasn't been great. Now, actually, it's not even really just Apple. Intel, Google. I mean, these are some big bellwethers here. IBM. So keep an eye on this, because if tech starts to really lose some of its luster, it could take down this rally, at least for a few days. So let's keep an eye on things here. We have really interesting developments. It is the summer. Take it slow. Trade the best setups. Cash is a position when in doubt, guys. Remember that, okay? Talk to you tomorrow. Have a great day today.